All right, good evening, everyone. This is Ajit Mishra from Religare Research, and we are back with yet another session of Week Ahead with Religare Technicals. Uh, for the first time participants, basically in this webinar, we talk about markets, like the performance in the passing week, alongside with the key indices, how they performed, sectors which witnessed profit taking or witnessed buying interest, alongside with the list of Nifty counters, both top gainers and losers, followed by our outlook on the key indices, both Nifty and the banking index, followed by some of the stock ideas which look promising to us. So let's get started. And before that, a quick disclaimer that we share our insight based on the observation that we have on charts. It's not a trading or investment recommendation. So before making any decision based on the inputs that we're going to share and discuss, please take help from your financial advisor. All right, so third successive week of decline, Nifty shed, both Nifty and Sensex shed over 2.5% each. Last week we talked about breaking 18,300 levels, and since then we are seeing this profit taking continuing in the Nifty index. And if you see that on the structural front also, barring pharma, which ended with a gain of over 1%, all the sectors witnessed very sharp cuts. So media last week was also the top losers. This week also we are seeing that 9% kind of a cut, followed by reality, metals, energy, and auto. So all these sectors shed sharply. And apart from these sectoral indices, the mid cap and small cap, the broader indices also witnessed very sharp dip during the week. So in fact, I was checking the small cap graph at the end of the day. So weekly we have lost nearly 9% in the small cap index in just 1 week. So it has engulfed the gains of last several weeks, in fact months, I would say. So this is the kind of selling pressure that the last week we have seen in broader markets, as well as the sectoral indices also. But despite all the negativity, we have list of top 5 gainers, especially from the defensive basket, healthcare and pharma. So Divis Lab, Apollo Hospital, Cipla, Nestle, Sun Pharma, all these stocks contributed on the positive side. At the same time, the auto major Tata Motors slipped nearly 10%, followed by Adani Enterprise, UPL, Tata Steel, Adani Ports. So it was definitely, barring the defensive, it was a bad week for across sector and the broader indices as well. Now, what to expect from the key indices first? So this is the weekly graph of Nifty index. So last week we were here, a small candle, negative candle, but thing that we have shared is that 18,300 is what we have already seen a breakdown. So now 18,000, 18,100, and then 17,800 could be the next area. So we have tested the same, we have closed around that same levels. 17,800 is basically a critical area. And why we are saying this? You can see this, this faded line, yellow color line. The last time when the markets were in the corrective phase, this is 20 days of exponential moving average on the weekly chart. So market respected that level and then witnessed a rebound. So this time around also, in case if market have to witness any recovery, it should respect this level. So the indications are not in the favor, to be honest, because this kind of red candle means market ended almost on the day's low in today's session. This kind of negativity plus banking or any other sector is not looking very positive, which can help the index to hold the level. So possibility of this breakdown is high. So what to anticipate next? Now after this level, this broadening formation upper band, this 17,400 levels, maybe closer to this level, is the next support, critical support for the market. Within this consolidation range, we expect this area closer to this area to act as a immediate support, and then next closer to around the base of this pattern, close to around 17,100. So 17,100 to 400 could be the next major support for the market, considering the, all the key indices, sector indices, plus the index majors, which were earlier saving the markets, are, trading with a negative tone. What if there will be any rebound? Then 18,200 to 500. This area is going to act as a very strong resistance. So it will be more of like a sell on rise. Last week we discussed about the same approach. So we are continuing with the same approach. It maintains sell on rise until we reclaim or form some reversal pattern in the index, on the daily or weekly chart. When it comes to stock, it is very important because though we are saying that the index is down by roughly around 2.5%, but we all know the kind of damages that we have seen in the broader markets. So avoid averaging your last making position. Do maintain shorts. This is something which is very critical considering the volatility that we are seeing from the global market also. So it was like, the US market day before was on trading with a positive bias. So we were wondering that why our markets are under pressure. But today it was more of like, aligned trade that we are seeing. So the clues are mixed from the global front. And in case if we are not maintaining shorts, it's going to be very difficult to survive in the market like this, especially because in case if you're holding the stocks in the mid cap and small cap basket, and it's very difficult to hedge those positions because the kind of, volatility that we see in the broader market is much, much higher than what we see in the index or the index majors. So when it comes to the broader market positions, means mid cap and small cap position, do maintain stop losses, and it's okay exiting with 10% kind of a loss instead of increasing that loss to 50%. So this is something which is I really wanted to share considering the market tone. Another important aspect is the banking index. So banking index, last week we talked about after 6 weeks of rise, this candle is negative. We can see the participation on the negative side. So it outperformed the index on the downside also. So nearly 4% kind of a cut is what we have seen in the banking index in this week, and it also ended around the week's low as well. So 42,900 was the area basically where it respected for a time being, but after that breakdown, we are not seeing any respite despite oversold position some of the stocks, especially from the PSU basket. So that clearly indicates that the move that we were seeing earlier, as for the time being, has faded away, and the next leg of the decline in the index, in the Nifty, might be because of again this continuation in the decline in the banking pack. So what we are seeing in the banking index, 41,900, this was the zone, the last breakout area from where we saw this rebound. But we have anyways engulfed the 4-5 weeks of gains. If you can see this red candle, and these are the weekly candles. So 4-5 weeks of gains we have already engulfed. Next is this again a 20 days of exponential moving average, which comes closer to around 41,500. So 41,500, sorry, is the almost the immediate support area. The next is close to around 40,750. That's the this 20 days of exponential moving average, which we expect the index to test. So again, in case it will be rebound like 42,350 to 42,900, which was earlier as acting as a support, should act as a resistance now. But more important aspect is that PSUs, we have been keep on reminding that when the markets and the PSUs were witnessing great traction, to keep trading your stop losses. So in case if you're holding those stocks, especially the smaller PSU banking names or stock like Yes Bank, please don't look for averaging the positions as of now. So like at times we see that the stocks were up around 60%. Now we have seen a 20% kind of a cut. It's a good buy. So please don't do that. Let the market stabilize, and for the accumulation, prefer the private banking names. So that is something we have been reiterating even when the PSUs were outperforming the market. So that tones remain the same. Now coming to the stock specific opportunities. So obviously when the markets are not seeing any respite, so healthcare, as of now looks comparatively better. Healthcare and the FMCG pack selectively looks comparatively better. So within that space, Apollo Hospital is something that we like. So you can see that this consolidation, post that consolidation, a breakout, then a marginal retracement towards it, consolidation band again, and again a surge. So due to this market volatility, we are seeing a bit of profit taking, but the tone is still positive. So Apollo Hospital can again, witness traction once the market is going to stabilize or witness any rebound. So Apollo Hospital is one such stock that one can keep a radar. Means it's not that even the defensives are safe and they're not going to see any reaction. The more important aspect is they're comparatively stronger as of now. So you should maintain your stop losses when you are trading the Apollo Hospital or any other like defensive name on the long side. Because today we were seeing that some of the pharma names which were doing good earlier, now witnessing profit taking in the market like this. So they are comparatively better still, but you have to maintain stop losses when it comes to the long trade. Another important and interesting chart that we have, which participant can look at and look for accumulation. Marico is basically one such stock that if you see this stock, it's a weekly chart. So like for several months, we are seeing this stock, hovering in this band, close to 480 to 540. So this band is currently intact. So especially in the market like this, wherein we are not seeing any respite across sector. So not to hide, but at least something to look at from the perspective wherein the volatility is comparatively lower, and we have potential wherein we can hedge our longs. This is one such space which we believe has a potential to do well. So Marico can continue to hover in this range. Any dip around 490 to 500 zone can provide you the opportunity to accumulate fresh. Next comes the important part, which is where to go short in case of the market continue to reel under pressure, the kind of indication that we already have on the key indices. So Berger Paint, though we all know that the paint counters have already witnessed very sharp correction, be it Asian Paints, Berger, Kansai, Nerolac, but Berger Paint is indicating a possibility of fresh decline. On the weekly charts, there was a triangle pattern which was forming, and we are just seeing a breakdown of the same. So maybe in the next week, and apart from that triangle pattern, this long-term averages on the weekly chart was also got breached. So earlier also we had this kind of breakdown, but this is the third time that we are seeing from the triangle pattern. So usually it ends up resuming the trend, or at least towards the lower band of this pattern. So close to around 340, 45 could be the area it might test. 540 could be the area it might test. So this is one stock which looked weak to us. And lastly on the list, Can Fin Homes. So be it the banking or the NBFC basket, underperformance is definitely higher. PSU banks and like select stock from the NBFC basket, they are falling like 9 pence. So Can Fin Homes also, you can see this, a sharp decline followed by recovery phase in a uptrending channel and a breakdown. I guess we've discussed about this stock earlier also. So just to reiterate that view, that is very difficult, to negate this pattern, especially if it forms in the market like this. So indications are in the favor that this lower band close to around 460, 450 could be the area that it might going to retest in days to come. So this could be the one of the candidate which you can look at for initiating fresh shorts. So just to sum it up, when it comes to the key indices, indications are pointing towards the decline to continue. And for the Nifty 17,800, the level where we've closed today is critical, but the kind of indication that we have from the other indices, that indicates that this decline is here to stay, this negativity is here to stay, and close to around 17,400 to 17,100 could be the area it might be testing. Upside, there'll be multiple resistance around 18,200 to 500 area. Banking index, again, the major negative part that is basically causing the damage now, and we expect Nifty to drift lower because of banking, because we still have room on the downside. Close to around 40,750 could be the area it might test. Apollo Hospital and Marico, these are two stocks which are comparatively stronger. But again, I would reiterate our view that when it comes to market like this, wherein we are not seeing any sector getting any respite, is very important to maintain your stop losses, especially if it's a derivative position and the future market position. For the shorting, Berger Paint and Canfin Home, they are the best candidates. So now with this, we'll do a quick poll and then we can start with the Q&A session. So please quickly fill your feedback and then we can start with the Q&A session. In case if you have any question, you can put that in the Q&A tab. And please restrict your questions to the discussion that we had around the key indices or any sectors. Definitely you may ask, but not the individual stock specific queries. So please quickly fill this feedback so that we can start with the Q&A. And if you're done with the feedback, you can start posting your question in the Q&A tab. All right, let's get started with the Q&A. We have question lined up. All right, so first question is a lengthier one, so I'll just read it for you. Rajesh Kumar have asked, looking at the decline, don't you think that technically also it was due, especially when the Nifty has moved from 16,800 to 18,900 on the weekly chart without any pause, significant correction in between? So it's very difficult to say, Mr. Kumar, in the hindsight. It's very easy to say in the hindsight that this kind of correction we were anticipating, and to be honest, nobody can vouch for that. It's just that I always recommend following the trend. So as long as the trend was positive, we were playing on the positive side. The moment we saw that the trend has reversed below 18,300 mark, we have changed the tone. So it's not that you should be right about the market bottoms, because as of now, we're still not sure whether we are going to find the support around 17,400, 100 area, maybe it inch lower. So the best part is, in case if you follow the trend and align your positions accordingly, you will make money. So instead of trying to gauge the tops and bottoms, I personally feel that the best thing that one as a trader one can do is to follow the trend. Okay, so Mr. Amar has question on our view on the IT sector. So IT as a sector, the challenging part is that the global clues are not showing any sign of respite. And in fact, I would say that our index majors, IT majors are doing comparatively better in comparison to what we are seeing in the global market, especially the Nasdaq Composite, which is tech heavy. We are not seeing any sign of recovery or respite. So like last week also, I guess we have discussed about the IT sector in detail. So just I'll reiterate my view that stick with the IT majors, at least for a time being, because the kind of volatility that we are seeing across the board, especially in the mid-cap names across the sector, it's very difficult to manage position. So if you are thinking from a short-term perspective, I would definitely recommend to stick with the top performing names, stock like Infosys, TCS, they are holding strong still. And from the, next rank, HCL Technologies also looks, favorable. But other than that, we feel that there is a possibility that in line with the market trend, they may drift lower, like, mid-cap IT counters, 5 to 10% from the current level. Okay, next question is from Mr. Sagar Bani on metal and IT. So IT we have already discussed. Metal, definitely I'll share my view. So metal, so far was among the top performing sector. So that was something which was, still continuing, I would say, because the metal index is still closer to the record highs, which is definitely positive in the market like this, and especially when the global clues are not favorable. So, but again, within the sector, The top performing names like JSW Steel, General Steel, these are the two names which we have been continuously discussing over this platform, which looks best, which looks relatively they have performing well. They are trading at the record highs. Rest of the stock, be it Hindalco, Tata Steel, VEDL, National Aluminum, same. All the other structure looks comparatively weak to us. So other than these two counters, rest of the stocks can witness further selling pressure. They are comparatively better structure. So on dips, one can consider accumulating these top two names. But again, since the markets are volatile, do maintain stop losses if it's a trading position. So no stock specific queries, please. When can we go long in the Nifties? So that is something, Mr. Hemant, again, I've already answered, because the only thing that one can do as a trader is to follow the trend. So as of now, the indications are in the favor that market is sell on rise. So 18,200, in case if it comes, one should look for shorting opportunity instead of buying. And similarly, below 17,800, 17,400 could be the next area where it might take a respite. And see, anything which is going to happen in the market is going to happen during this 9:15 to 3:30. So we will get time to enter. So if we think of in this way that the 17,800 was a crucial support, let's start accumulating the stock. So stocks could be one area where one can start accumulating depending upon the prices, because the price cuts, as I was sharing, especially in the broader markets, they've seen very sharp cuts. So in case if you get the comfort when it comes to the price in the broader markets or stock otherwise, you may start accumulating. But when it comes to index, wait for any sign of reversal, because usually we see that the trend could last for days and weeks. So as of now, indications are in the favor that you should continue with sell and rise instead of looking for the long trades. Okay, the next question is interesting one. Mr. Shranavan have asked about the next Nifty 50 counters. So though we don't track this index very closely, Mr. Shranavan, but yes, like as the name suggests, these are the top 50 counters apart from Nifty 50, which makes the Nifty 100 index. So these are definitely good companies to look at, but from the index perspective, it's very difficult to comment that how this index performs. So maybe next time I'll just look at it before I'll connect for the webinar, then we can discuss about this. Other than private banks, which sectors are attractive to invest in the downturn? So this question is from Mr. Benjamin, that apart from private banks, which sector one can look at to invest in the downturn? So yes, that we can definitely discuss. So first, the private sector banks, that is there. Then we have auto stocks. So stock like Aisha, stock like TVS, Maruti, M&M. Top four names, because last time when the auto stock started witnessing traction, they were the top gainers and top performers within the pack. So I feel that this correction can be utilized to accumulate those stocks. Other than that, select stock from the capital goods space, because the budget is around the corner, like LT, Siemens, and ABB. So all these stocks, and what more, selectively FMCG also, like FMCG and select pharma counters. So these five sectors basically that one can keep on radar. All right. So next week of Nifty 50s, we have already shared in detail that 17,800 critical support, below that 17,400, 17,100. Next question is from Aditi Jan, that do you think Bank Nifty, which was leading the last leg of the Nifty rally, will underperform from here on with the news of COVID coming again? So, this is important to understand that market finds its own reason to correct and go up. So this time around, this news around the COVID is pushing the market slower. But I feel that last week itself we had this indication that after 6 weeks of rally, we had a negative candle on the banking index, and that candle shows whether we are going to see some profit taking or a range bound move, not the other way around. Means we can't reverse the candle on the weekly chart just like that. So yes, now indications are in the favor that this underperformance which we are seeing in the banking index may continue, and that is the reason why we are saying that despite having a support at 17,800, Nifty might not respect that support, because banking has room for further downside, and banking and financials put together roughly have around 40% of the weightage in the index. So because of that reason, we expect this negative tone to continue, and yes, there is a possibility that the banking index may underperform the market. See, chemical sector, Mr. Nagarajan, we are anyways seeing a performance in line with the sector, that almost all the stocks. But yes, one thing which is positive about this sector is that the quantum of decline is comparatively slower. So as of now, this is what the indications are, but it's not easy to navigate, especially in the market like this, wherein all the sectors are witnessing pressure, and it's very difficult to say whether this sector is not going to resume the trend like what we are seeing in the other sectors. So as of now, yes, they are showing comparatively relatively higher strength, but I feel that one should wait for decisive reversal and any sign of outperformance, continuation of the outperformance, and then look for buying trade in this particular sector. All right. So PSUs, Mr. Rajesh Katyal have asked, what do you think of the PSU banking? So that we have anyway shared, Mr. Katyal, that in this decline, two important things that which one should not do. One is averaging your loss-making position, especially in the stocks which were in the limelight, including the PSU banks, because we all know the kind of gains that we have seen the PSU bank in last 3-4 months. So averaging those names is a big no-no. Within the PSU space, comparatively, better names, SBI, Bank of Baroda, Canara Bank. Still, I would say that even if you are holding these top 3 names also, for a time being, it's an avoid to add to the position. Yes, SBI, one can accumulate in case if the view is long-term to medium to long-term at the lower level, because it trades largely in line with the performance or in tandem with the private banking majors. Rest, otherwise, you should focus mainly on the private banking names instead of the PSUs. So next question is from Mr. Balaji around the pharma sector. So pharma, I believe that one should continue with at least as long as we are seeing this rumors around and news around the COVID thing continuing. So you will continue to find spikes or an uptick in the pharma names. But the best structure, if you say, within this space is still Sun Pharma and Cipla, because they are still hovering around the record highs. The rest of these stocks, they are just witnessing a respite due to these news flow on the global front, and technically they are not very strong structures. So stick with the top names is something that we recommend. So we should avoid a hypothetical situation, because especially when it comes to COVID situation. Mr. Kumar have asked Prince Kumar around this, what could be this interest rate scenario or the COVID situation deteriorates further. It's very difficult to comment. As of now, what we know is that we can manage our risk. What we are seeing in the index, the tone is negative, 17,400, 17,100. So the idea should be, instead of looking for clues and news item and confirming your bias, if you are negative, you look for negative news. If you are positive, you look for positive news, be it news channel, internet. So don't get into this unending cycle. The best thing that we can do as a trader, in case if you have made any investment as an investor, is to have this confirmation that I have made investment in the right product, and I'm confident about that. In case if the markets allows you, you can add to those position if the level comes as per your risk appetite. All right. So we have answered, I guess, all the query, except we have a couple of queries around these stocks, which we can't address. So yes, rest we have already answered. So thank you, everyone. Next week, I guess, is the last week of the month when it comes to yes, the monthly expiry. So obviously, the derivative team members going to join and share about the monthly outlook based on the rollover data. So yeah, with this, we can end the call here. Thank you very much for joining in.